China has been holding on to vast quantities of US debt for years. This is partly to offshore their currency, but also to hold a powerful tool of manipulation. Those who are the creditors hold the power in their hands. It's no different for a country. We have watched the trade issues back and forth between the US and China, and it's interesting to see how as the tariffs have piled on, China has allowed their currency to be devalued. Coincidence? You came here for the truth, so let me unveil that for you. Today we are going to look at China selling off more of the US debt. I've been tracking this for quite some time. I give you updates every single month. This video is going to tell you everything you need to know. Let's get into it right away. This information is coming directly from the Treasury's own website. You can see it for yourself. Major foreign holders of Treasury securities. This is the most recent data, which is from April 2019. Of course, this is confirmed to be the newest information. As you can see at the very bottom of the screen, June 17th, 2019. I have to mention that on every single video because there's always about 3 to 5 comments suggesting this is not the newest data, but in fact, it is. So you can do that search online if you want. If you just simply type in the major foreign holders of Treasury securities into a search engine, you will be able to pull up this website. I just wanted to give you an idea of what has happened recently directly from the source. I'm going to show you some charts that correspond to it. You could see China holding $1.1 trillion worth. Obviously, this is a very large amount, and they hold the power of this in their hands. The creditor holds the power, not the other way around. They are doing it for multiple reasons. They are diversified as well. China has purchased a significant sum of other currencies as well. Japan, as you can see, is holding on to over 1 trillion also. So that just gives you an idea of the biggest holders by far. China and Japan each having themselves over $1 trillion worth. Now you can go down the list and just showing you Brazil, the UK, Ireland, Switzerland, and so on. Many of these here are shells, obviously. You know, you look at something like an Ireland holding onto $270 billion worth. It's not necessarily the country Ireland itself, but there are many shell corporations and so on. As you can see here, Switzerland, Luxembourg, Cayman Islands, and others. So this happens to be the case for many places. We can't really tell exactly, but it just gives you an idea if they're purchasing more, if they are selling, and we can track the progress over the last year, what they have done exactly. If you go down further, you could see the grand total, and has there been more, has there been less purchases? Generally, what we find is that there is a significant appetite for US dollar, simply because if you look around the world, what we have, particularly in Europe, is this negative interest rate now with, I believe it was something like $12 trillion of negative yielding bonds to date. These governments are offering this as an asset, as an investment, and yet you get negative returns. It's crazy to me, but they're selling. In fact, they love it. Look at what happened with Argentina's 100-year bond. I mean, you might as well throw your money right in the garbage, and yet it was actually selling more than they were handing out. That's how crazy this was. Now, the value of those have diminished considerably and they're at a record low, but just look at what happens around the world where these governments issue these bonds, and as far as I'm concerned, they're nonsense. So there's no doubt in my mind why the investors are looking at this and thinking the US is a good bet. It's supposedly quote-unquote guaranteed, and they can get a decent return, at least compared to the other options. One other note I just wanted to make throughout this is that Russia had fallen off of the major foreign holders because they sold off a considerable amount of their treasuries at some point, and although they do have some, it is simply too low to be considered part of the major foreign holders. I did cover that, of course, on here, and it continues to be an issue because it's something that I watch looking at what they are buying, and it's all about doing away with the US dollar. China wants that, Russia wants that, but at this moment right now, China's holding on to way too much to simply just let it go. They need to diversify over a period of time. They're not going to do it overnight. It's not going to be over a couple years. It's probably going to take decades. US cross-border investment, you could see right now, month after month after month, we have watched this falling into a negative territory. Foreign investors are unable or unwilling to purchase as much as they once did. And the reason partly is because of the exchange rate right now. The US dollar is very strong, so maybe they are looking elsewhere. At the same time, maybe they're looking for higher yield because the US debt is not giving what they need. Maybe they're buying into some crazy derivatives. Maybe they are looking at other assets in their particular countries. But this is what I wanted to show you, as you can see it here documented, so it highlights what's really happening. Here you can see the Chinese holdings of US Treasuries, just giving you an idea of how this has gone. In the recent past, of course, we have seen the sell-off that has taken place over the last several months. But if you take it back further, you will see that this has been a trend on average, all right? We are back into the levels not seen since 2017, but also you got to go further back. This was peaking out at 1.25, I believe, somewhere in that region, 1.25 trillion, and that has been falling ever since. So we'll look at what China is doing over time and just trying to see how that really plays out into the geopolitical issues and so on. But I just wanted to give you an idea of what's happening with China. So if they're selling, then who is buying, right? I get this question 50 times on every video like this that I do. You also have to wonder, what is China buying if they're selling off of their US Treasuries? I'm going to show you that as well. UK holdings of US Treasuries, they have been buying considerably over the last few years, and this has declined here somewhat, but it could just be one little blip along the way, because at least from this chart going back all the way to 2016 up until present, they have really increased the amount that they are holding from, let's say, 220 or so up to now over 300. So they have a considerable amount as well. One of the major foreign holders, Saudi holdings, have increased to a record amount. These are one of the best partners for the United States. Obviously, with the petrodollar, this is one country that can simply do whatever the hell they want, and the US will back them. And oh no, I've said too much. Foreign holdings change in US corporate stocks. Here you can see into the negative month after month after month. Wow, this has really changed simply because of what's going on with stocks being overvalued. You have the US dollar being an issue. You have the trade issues. What's going on globally right now has really changed from 2017 up until present. There is a definite concern going on in the markets. They're worried about what's going on with the yield curve. They're looking at all the factors that are really falling into place today, and this just gives you the facts. Foreign flows in and out of US stocks, 12-month moving average. This has really been declining here in the last little while from 2018 into 2019, falling further and further. Even though we have had a large sum of money that has moved into things like the FANG stocks and others, there has been a large amount that has been pulled away from the US markets from foreign investors. Consolidated foreign transactions in long-term US assets, just giving you an idea there where it's broken down. Long-term treasuries, agencies, corporate bonds, corporate stocks, and so on. That's a little bit difficult for you to see. I just wanted to give it to you if you want to check it out. And now the information I wanted to cover. This is part 1, showing you Russia and China gold reserves, which have increased considerably from what looks like, let's say, beginning of 2017 up until the present day. And you're looking at the Russia and China treasury holdings, which have together come down quite a bit over this period. So it looks like they've been adding to positions of gold and selling off their treasuries. This is something that has been clear and unprecedented what they have been doing. They've been talking about it. They've been making statements about it. They have been very public about it, that they want to do away with the US dollar. They are not at this point going to be able to get rid of the US dollar, but they have made progress. They have been doing currency swap agreements. They have been setting up the AIIB, and they have been creating new institutions that are pulling away from the US and its hegemony. This is something that will need to take place over a long period of time, but certainly that's the direction they are going. This just shows us one part of that puzzle. And now the second thing I wanted to show, currency markets expose a crucial flaw in the China tariffs. What they can do at any moment is simply weaken their currency, and suddenly the effects of the tariffs are not felt. That's just the way it goes. Any country can do this. They are all able to. In fact, all countries are devaluing their currencies because of central banks. All central banks have the same policy, and that is print money. They all print money, one degree or another, but they're all doing it now. Every central bank is engaging in some sort of monetary easing to some degree. If you don't think that the Federal Reserve is doing it, you need to understand what open market operations are. Maybe they're not adding to their balance sheet, but they simply need to print money in order to push interest rates down, to keep them this low, to keep them lower than where they are today. In order to do this, they need to do open market operations. That means printing money. Understand that, and you will know what they are up to. So this is something that I find very interesting to see if more tariffs are applied to this. Maybe they're going to weaken their currency further than that 7 mark. We've been watching this for quite a while, and it will be interesting to see if China actually does. Then we're going to have the US come out. They're going to make some statements saying they're a currency manipulator. China's going to lash out at them. It's going to be a back and forth thing. It's just going to get worse. It's going to compound. So let's see what happens. Supposedly there's a deal already there. It's done deal. You just got to sign on the paper, but I think I might have heard that once or twice before. Once it's a done deal, that's going to be beneficial for the markets. Of course, we'll see if it actually happens. That's all for this video. If you found it informative, please give me a thumbs up. Hit that like button to support this channel. Thank you very much. If you want the financial education you were not taught in school, these 2 books have everything you need from top to bottom, A to Z. You can get all the details you need at the link in the description. I talk about the US-China relationship. I talk about the IMF. I talk about central banks. Everything you need to know. Check it out at the link. If you want the audiobook, that's available at themoneygps.com. If you want to know what's going on right now, then you should definitely watch this video. It will be interesting to you. Click on it and I will see you there.